Welcome to ZKast, everyone. I'm Cisco from ZK Research, and I'm here with Bob Laliberte. Bob, ZKast regular, part of the Cube research team. How you been doing, Bob?
I'm doing great, Zias. Thanks for having me on.
Yeah, we're going to talk Cisco today. Cisco, a couple days ago, announced their Q4 results. So they wrapped up fiscal year 2024 for them. They're looking into 2025. It was an interesting quarter for them. Certainly from a positive perspective, order growth was up 14%. And so almost every product area is up order-wise, 6% if you take out Splunk. The numbers were, they put up 13.6 billion in revenue, which was a slight beat over street expectations. Splunk was about $1 billion in revenue, 960 million, I think, is what they said. The guide was in line with what the street was expecting. ARR is now 51% of revenue. I think all in all, considering the lumpiness the company has had with revenue, it was good to see order growth up across the board. And one of the comments Chuck Robbins made was the digestion period, and he's described that as a problem with their customers. They overbought product.
Correct.
They didn't know what to do with it, or they knew what to do. They just couldn't get it deployed, and they had to digest it. And that's a common sentiment that's been echoed by other infrastructure vendors. And that period seems to be over. And so what were your thoughts on just the financial performance this quarter?
Yeah, absolutely. I think you hit on a lot of the key points. The fact that organizations we've finally, or in Cisco has finally gotten through that supply chain glut that was in the market for everything, right? And it's not a Cisco problem. Everyone had it, but being the largest provider of networking gear, it's going to take them the longest to get through that digestion period. So I was super glad to hear that they had made it through that period. And I think, like you said, the other encouraging thing is they've broken that critical 50% mark of subscription revenue. So as we all know, that's really hard to convert a net 30 to subscription business, right? Yes. And trying to do it over time and keep everyone happy and so forth. And so I think you said, like, the cool part about that was the Splunk business, you said, contributed 960,000 into 960 million, 960 million in subscription revenue to Cisco. So when you're thinking about that from an acquisition and the strategic nature of it, right, a huge boost in helping drive that subscription revenue. And so I think from my perspective, I think while they were down year over year, it's tough to do those year over year comps right now because of all of the supply chain issues that were there. I think the good news is they've said we've hit bottom, and from here we're going up. So now is when we'll start to see how they really start to perform in this post-supply chain, post-pandemic era.
Yeah, and actually you can see the impact of Splunk too. The operating margin was a record for the company, and gross margin was 67.9%, a 20-year high. In fact, even without Splunk, it was still 67%. So they are still making money. It's funny, people talk about Cisco's problems, but they really are first world problems. They're a big company that generates a lot of money. I'm not fully convinced we're out of the digestion period yet. I think there's still might be, some lumpiness ahead. And it is a word of caution for infrastructure vendors as we go into this next wave of infrastructure purchasing, which is largely driven by AI. I'm a little concerned now companies are buying way too many AI servers and things like that, and they're not going to be able to get those deployed in time, which could create another pause. And so if you're an infrastructure vendor, you got to make sure that as your customers are buying things, you've got the right plans in place and customer success people in place and implementation services, because we don't want to see a repeat of this. Would you agree?
Yeah, I mean, it's really going to be, and especially given that most enterprises don't have those AI skill sets in-house. So the key is really going to be putting together those blueprints, those validated designs, the services to help accelerate the adoption and get to that. What you've seen on the street lately is everyone's asking for, where's the ROI? Where's the ROI and all this doing? So when you embark on those AI journeys, you should probably have a pretty clear idea of what are the workloads that you want to run on it, how that's going to benefit the company. And then I think there's the whole infrastructure piece that needs to be brought into it. And as we've discussed before, there's two parts to that, right? There's going to be the back end infrastructure supporting the AI workloads and training and so forth, inferencing. And then there's also going to be the front end network that's getting all the data to those locations, right? To those workloads to be able to get the real time insights that organizations are looking to leverage that AI for.
Yeah, yeah. And so let's stay on that AI theme. I think on the call, Robbins stated they had about $1 billion of AI orders. That was good to see because in previous quarters, he's used the terms line of sight and pipeline and things like that without actually being able to give a number. So he gave a number this time. And he said he's expecting an additional $1 billion in AI product orders in FY25. So that's certainly noticeable. In fact, that's as big as some of their competitors are, total revenue. But you and I were just talking about this. The impact of AI is actually greater than that, right? So that's infrastructure directly related to AI buildouts, but a lot of product refresh today is because of AI. So just share your thoughts on that.
Yeah, I thought it was interesting to see they were talking about double-digit growth for wireless. And when you think about why a lot of these organizations want to leverage AI and all these, real-time insights, it's about getting the data from those sensors, those IoT devices, and getting them into the inferencing engines and being able to yield those business insights that they want to run their businesses more effectively. In order to do that, though, they need to ensure they've got the lowest latency, highest throughput, things like that. So you're starting to see organizations looking at what they've got. And now with the advent of 6E, Wi-Fi 6E, giving you the additional spectrum, greater performance and things like that, and now you've seen that additional spectrum has been approved for outdoor use as well. So I think we're going to see organizations starting to modernize their, what you might consider the front end network, right? The pieces that are going to be connecting all the IoT devices, all the sensors, things like that, that will then feed those AI engines.
Yeah, and so if you think about the impact AI is going to have, one could argue that we may be looking at a pretty large infrastructure modernization project for companies. You need more different security. In fact, even I think if you look at what they're doing on the collab side, there's a lot of sensors built into their WebEx devices or their Cisco endpoints, right? So there may be, I certainly think there is a larger refresh opportunity here ahead of them to tie infrastructure sales to AI, although not directly attributable to AI sales, if you know what I mean.
Yeah, absolutely. Well, and some of the big things we talk about with AI is the power consumption. And a lot of the things that Cisco's done, I know you visited their office in Penn, in New York City, right? One Penn, and seeing some of the stuff they're doing to save on power, right? Using PoE instead of the traditional copper and things like that. So just simple things businesses can do to optimize their environments to save on power so they can then leverage it for the very power hungry AI engines. So there's a lot of people, right? For the last couple of years, it's all been a focus on sustainability. The hard part is AI kind of blows that out of the water, right?
Yeah.
When you're deploying all these GPUs.
Well, that's an interesting sort of yin and yang, right? I want more AI, but I'm less sustainable. So
yeah.
One of the interesting facts he brought up on the earnings call, and I'm not sure they've talked about this before, though, was the large number of $100 million platform sales that they had. And they called a four in particular, and I'll just read them off here. One was a leading global logistics company, and that sale included switching, routing, security, Splunk, collab, and services, which he said was actually the first Splunk Cisco cross-sell deal. Then he had a leading global consultancy that was switching, routing, wireless security, observability, collab, and services. There was also a major airline. There was a gaming one. And what I liked about it, and I'll include this slide should be up right now, but he describes what they bought it for. And so with the logistics company, they were using Cisco to automate network operations to be able to do things like have AI-powered robots, right? For the airliners to be able to improve gate efficiency and things like that. So that's what we've talked about a long time, selling outcomes,
correct,
right? Which is very important, but through a larger portfolio deal. Now, I think this shift is great for Cisco. One of the criticisms we've had of the company historically is they have a good security story, a good collaboration story, a good network story, but there was no Cisco story, right? And so your thoughts on this shift?
Yeah, I absolutely am a big fan of it. I think coming out of Cisco Live, one of my big takeaways was their theme of go beyond. I actually attributed it to go beyond their own BUs. And what we saw at Cisco Live was the start of a lot of integration between security and networking, security and observability, networking and observability, right? So that to me was a significant shift for organizations to, in a Cisco organization, to be able to focus on how can we drive more value and better outcomes by leveraging all of the Cisco products and solutions.
Yeah. Now, in conjunction with this change, they announced some leadership changes. And so JD, John Davidson, who we all know and love as the leader of the networking group, will be exiting the business, remaining as a consultant to Chuck for a while. And Jeetu Patel will now be the chief product officer and will run security, collaboration, and networking. And I do think that's significant. I think historically, one of the things that's held Cisco back from being a platform company is the product silos.
Correct.
So you put it under one chief. The thing I like about Jeetu is the man's never afraid to break some eggs when making an omelet. Heck, I think you go around breaking eggs even without making omelets, right? So he likes to shake things up, and I do think thinking about things a little differently inside Cisco, not worrying about historical silos and things are important. So your thoughts on Jeetu Patel as the new chief product officer?
Yeah, I think it's a great move. I really do. I think, one of my foundational aspects of product management and so forth has always been within the same company having that principle of least astonishment. So as you go from one solution to another, it's not something completely different. So having one leader in place can really help unify, I think, the Cisco product messaging. We had already heard coming out of Cisco Live that, prior to that, we had heard, oh, we've got an AI assistant and this group's got an AI assistant and that group has an AI assistant. And then it was suddenly
a lot of assistants.
Yeah, suddenly it was, no, we're going to have one. There's going to be a Cisco AI assistant. So that was like the first sign of this is great news. I think this shift that's happening here is also going to be good. And I don't think there's, anything, Jonathan Davidson did a great job. He had to step in when Todd left and try and drive forward. He implemented a lot of great things to push us closer to that, the cloud networking story, right? Trying to unify the management and so forth, driving some of the hyper fabric. But I think Jeetu has really made an impact in the security business in driving that platform approach that now, as you mentioned, they're trying to highlight. He had come up with the innovative Hyper Shield approach and so forth. So I think Chuck felt like Jeetu was the person to bring together. Like you said, he's going to break some eggs, but he's going to bring all of these groups together. And they said it's going to be collaboration, network security. And when the time is right, they'll bring observability in as well. So I'm really excited to see what Jeetu is going to do, what that roadmap is going to look like under a unified leader for all of those solution groups.
Yeah, and in fact, I think one of the best things JD did was build up the networking cloud. I know when he took over the group, there was a Meraki cloud. I think they were building a separate DNAC cloud, and a Catalyst cloud and things like that. And so there's one networking cloud, and I think one of the points of caution I had was, well, you're building a security cloud and a networking cloud, but yet you're trying to get data from both.
Correct.
And describe the two as loosely coupled, but I think you'll see. I think you'll see the two clouds remain, but I think you'll see it be a little more tightly coupled. And if you look at the whole value proposition of Hypershield, it's distributing security capabilities across the network.
Correct.
So almost by definition, you need to bring those two things together. And I do think the security and collab products have been completely redesigned. And I'm really looking forward to seeing what Jeetu does here, with product. And so I think this is a move I wish they had made a while ago. Perhaps networking wasn't really ready to it, but platform is the right way to go for Cisco, particularly in the AI era, right? Where I think it was Jeetu at Cisco Live that had said data is the new gold. Mm-hmm. And when you look at Splunk, observability, networking, cloud, Cisco
absolutely
have more data than anybody, right? So, how do you see that as a competitive differentiator?
Yeah, no, I absolutely agree. I mean, when you look at Cisco and even being able to tap into, when you think about creating AI ops and so forth, they've got their GTAC or their CTAC data, right, has so much data in there that they can leverage to look at what were the faults, what were the fixes, things like that. In addition to now they're rolling out a lot of their cloud services as well that they'll be able to do it. And then the coordination and collaboration between security, between collaboration, getting it from the observability solutions, right? Even Thousand Eyes and so forth. So when you talk about, I think they announced their global, the global area network
Yeah,
at
the global, the GAN.
the GAM, and so that's something that they're uniquely qualified to deliver, data from that entire environment. So I think they're in a really good position to be able to do it. I think the question is always, as always, it's going to be timing and how long does it take them to fully integrate these solutions and create that unified platform and start delivering it. But I think this is a step in the right direction. So I think what we're all going to be looking for is what's that progress look like over time, because we live in a time when things, right, innovation's accelerated, everything's working on an accelerated pace. So really want to be able to see what changes and how Jeetu is able to implement that integration across the different product units and the business units, to deliver unified solutions to their customers.
Yeah, and just a couple more topics here. One of the other things I want to touch on too, and this is a sensitive topic with people, is layoffs, right? The company announced a reduction of headcount of 4,000 people. On the call, though, Meta Marshall from B of A asked a question about it, and Scott Heron was pretty frank. He said, "Look, this is something we did last year, right? It's not as much. Well, there's a cost reduction element here, and I actually asked Scott Heron about it on the industry analyst call yesterday. There's an element of reallocation here, right? Where they're going to take some headcount and reallocate it to different roles, and they specifically called it AI, cyber, and cloud. I think Chuck had said last year that in a perfect world, if he could just take internal people, move them around, right, that would be the ideal situation, but skill sets don't match up. Scott did take it one step further, though, and say that they're looking at geographic movement of people as well. That doesn't mean they're going to offshore everything, but there's lower cost areas in the country to put people in. So he wouldn't give me an exact percentage that they're looking to reduce by, or he said don't think about headcount, but there is a large reallocation component of this. And so I'm not sure why people are surprised every year when Cisco does this. They've been pretty consistent about it. They're a very financially disciplined company. They acquire a bunch of companies. And so when the fiscal year rolls around, they true that up. And so this is, for me, standard operating procedure. And frankly, it's something I think all companies should do more often, is look at the headcount they have. And so I don't know if you had any thoughts you wanted to add there.
Yeah, no, absolutely. I think you're spot on. Is that and Chuck mentioned this when he was interviewed on CNBC, and was talking about the fact that, look, we're going to try and reallocate as many of these people, but when you acquire a large organization, right? I think it was only a couple of months ago they brought in Splunk, and so do you need duplicates of every function and so forth? So there's naturally just from that move, there's going to have to be some reallocation of talent. But I think that the good part, no one wants to see a layoff, right? It's just horrible. It impacts people that who are impacted.
It's sad. It impacts people's lives.
Yeah. So, but I think what he stated as well was that, look, we're really trying. We've learned from previous ones that we're trying to reallocate first, and so their goal is to, how do we keep as many of the people and put them into different roles that can help drive the new organization going forward. And I think that's just, again, the other piece of that is we're talking about the digestion issue. As orders increased through all of that, they had to staff to accommodate it. And so now you're also seeing that same trend down in a lot of companies where there's layoffs. I think he was asked specifically, is this part of an AI layoff? Are you leveraging AI so therefore you don't need people? And he indicated it was not part of that this was just part of the Cisco organization looking at how do we run more effectively lean? How do we drive resources to support the new structure that we're going to have? So I think that is something that, we'll have to see how it shakes out and what the end numbers end up of how many people have been reallocated and how many people have been laid off.
Yeah, but certainly, I think consistent with the strategy in the past. So, it's while I hate talking about layoffs as well, I think it's part of their strategy to reallocate where they can. The last thing I want to bring up is the stock price, right? So, the stock did shoot up on the quarter. I think investors liked it. Now, they're still not really getting a software multiple. And on the industry analyst call, I asked Sammy, their head of IR, what he thinks needs to happen for investors to give him more of a software multiple, given their 51% ARR now. And he was very honest about it. Actually, he was very frank, and he said, They have to stabilize the core business. That's, networking first. Once they can do that and show consistent growth there, he thinks that investors will look fondly on the stock and push the multiple up. And he says, if you look at every other metric, RPO's up, ARR's up, subscription revenue's up, right? The acquisition of Splunk increases margin, and so in a lot of ways, the company is looking like a software company, kind of smells like a software company. They're not trading like a software company. In fact, even if you look at with the increase, the 7% yesterday, they're still trading below where they were earlier this year, right? So I know you talked to some investors. What are they looking for from Cisco to get them to believe that this is a more of a software company than a hardware company?
Yeah, no, I think that's a great question. I think the more we see cloud adoption, cloud management software, and not just lift and shift, but real meaningful. Hey, this is a cloud native microservices management tool that we're hosting in the cloud, right? Doing things like that. I think certainly getting over that 50% ARR number is going to help drive them. I think from the analysts, they're going to want to see that be a lot higher, right? They're going to want to see that drive into the 70s and, ultimately, I think even higher than that. But I think there's the key thing is that they are making progress along those lines. When they get rewarded for it, I mean, at the end of the day, people, I think, still think of Cisco and they think of big iron boxes that go into the data center. And so there's a perception as well as the reality of how much that they're delivering as part of software and why software is moving much faster. But I think, like I said, a lot of as they integrate the business units, as they build out the software platforms to connect and integrate all of the solutions and bring those together, I think that might be an opportunity for them to be able to go out and tell the analysts a different story and be able to demonstrate how their business is becoming so much more software centric and that they're driving more of that recurring revenue from the software, and that more and more of the innovation is going into the software, like things like Hypershield and Hyperfabric and things of that nature.
Yeah, and while more software does mean higher margins, I also think that the shift to platform means higher margins. In fact, one of the things I asked Scott Herron, their CFO, on the industry analyst call was the deal margin on those large $100 million deals greater? And he told me I was thinking about it wrong. He said it's not, they quote to a certain margin, right? And so specifically deal by deal margins aren't appreciably different. But when you sell cross-platform, you push revenue up with greater operating leverage. And so you get better margin leverage as a result of that, right? So the more they can ship this platform company, which is what a software company is, the better the margins. And so that's something I'll be looking for to see if the company margins continue to grow. I think ARR is at a place that is one of the things I think that ARR does or potentially does is it creates more consistent refresh, right? Because customers are able to stay modern without having these big spikes in spend. And to me, that stabilizes the business, versus the lumpiness that networking historically has always had. Right. Because as you mentioned, it was a net 30 type of business, right?
Yeah, and I think just from an innovation perspective, when you're talking about on-premises software that gets upgraded, quarterly, kind of a waterfall type of approach, versus something in the cloud that's updated hourly or daily, and new innovation can come to market that much faster, which delivers greater value, which leads to better outcomes. I think you're just going to see, Cisco really ramping up their innovation and delivering more value. And then as a result of that, also being able to get better margins, right?
Yeah. All right, Bob. Well, I think we can wrap up there. So going into FY25, more innovation, more cross portfolio, more software, better margins. Is that accurate?
I think that's what we're looking for. We'll see. We'll see how it progresses over the quarters.
Yeah, so it was certainly a good quarter. I was happy to see the results and the return to order growth. And I do think it's important for Cisco from an industry perspective. I know there's some bears out there. They don't see Cisco as the bellwether they once were, but clearly when you look at the size of their business compared to all their competitors combined, they are still a bellwether. And if I tell the competitors all the time, I don't know why you're happy if Cisco has a bad quarter, because that means the whole industry is going to. So, I think as they go, so goes the market. And so that certainly is a positive implication for IT spend.
Absolutely. For the networking team, absolutely.
Yeah. So anyway, so on behalf of Bob Laliberte from the Cube Research, Bob, thanks for joining me as always. C.S. Caraval from ZK Research, and thanks for watching. Hit the subscribe button, and I'll see you next time on my next episode of ZKast. Thanks, Bob.